Hi, and welcome back to the Food Fund, where we analyze investing in food stocks. If you love food and love buying food stocks, beverage stocks, and restaurant stocks, you will love this channel. In this video we will be analyzing if Archer Daniels Midland stock is a buy. Archer Daniels Midland, stock ticker symbol ADM, is just one of many companies we explore on this channel. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Archer Daniels Midland. Archer Daniels Midland was founded in 1902 in Minneapolis, Minnesota by John Daniels as a linseed crushing business. Later, with the addition of new partners, the company began to enter a series of agricultural operation and processing businesses. Today Archer Daniels Midland is known as the expert of transforming crops like corn, soybeans, and wheat into various ingredients needed for food and beverage production, animal feed, industrial oils, and even renewable fuels. Now headquartered in Chicago, Illinois, Archer Daniels Midland boasts a global workforce of over 60,000 employees. It should also be noted that Archer Daniels Midland share price fell nearly 25% recently as their CFO, Vikram Luthar, was placed on administrative leave. The 2023 profit forecast was cut and the company is being investigated by the SEC for possible fraudulent accounting practices. Given this recent development, please take the reported metrics with a grain of salt, as it may be some time before corrected financials are released. Now let's look at the price action and hope it is not too bad. Starting with the 1-year chart, we see that Archer Daniels Midland had a CAGR of about -39%. Zooming out to the 5-year chart, we see that Archer Daniels Midland had a CAGR of about 3%. Archer Daniels Midland share price had been growing steadily until that massive pullback recently. If we perform a backtest comparison of investing $10,000 in Archer Daniels Midland versus the S&P 500, we find poor results for Archer Daniels Midland. In that comparison with the S&P 500, $10,000 invested in Archer Daniels Midland would have grown to $20,145 or a 15% CAGR versus $20,650 or a 16% CAGR if invested in the S&P 500. However, an Archer Daniels Midland investment would have been more volatile with a 26% standard deviation versus 19% for the S&P 500. Archer Daniels Midland outperformed the S&P 500 in terms of the best year performance, for which Archer Daniels Midland grew 40% versus S&P 500 31%, and performed just slightly worse than the S&P 500 for the worst year performance, where Archer Daniels Midland fell 20% versus the S&P 500 18% fall. In terms of max drawdown, Archer Daniels Midland fell 27%. More than the max drawdown of 24% for the S&P 500. Archer Daniels Midland also underperformed the S&P 500 in comparison using the Sharpe ratio and the Sortino ratio. Unfortunately, the dates in this comparison excluded January 2024, meaning that Archer Daniels Midland's 25% price decline was not included. Now let's hop over to market share and take a look at Archer Daniels Midland's market share. Here in this newest version of market share, we see the dashboard, offering a wealth of information at a glance. We see that food companies occupy around 50% of food, beverage, and restaurant spend in the market. From there we can see that the farm products sub-industry, which houses Archer Daniels Midland, makes up around half of food spend. Archer Daniels Midland has the largest market share in the food products sub-industry and is growing at around a 3% CAGR, as indicated by the green hue and the CAGR legend on the right. So we come over here and type in the ticker symbol for Archer Daniels Midland and see that the market share is 9.57% out of the publicly traded food, beverage, and restaurant stocks currently in the market. This means that almost 10 cents out of every dollar spent for food or beverages goes to Archer Daniels Midland. This is very strong market share. The 5-year market share CAGR for Archer Daniels Midland is 3%. This means that Archer Daniels Midland's market share continues to grow despite its dominant position. If we start in 2019, we see that the market share was 8.56%, 8.39% in 2020, 9.45% in 2021, in 10.25% in 2022, and 9.57% over the trailing 12 months. Though the market share at Archer Daniels Midland has risen over time, the rising trend peaked in 2022 and may indicate a reversal. Let's take a look at the fundamentals. Gross margin is 8%. This is very low but consistent with other companies within the sub-industry. Revenue has compounded at around 11% over the past 5 years and has reached nearly $97 billion most recently. Pretty solid growth, but we are starting to see a bit of decline in the trailing 12-month data. Looking at cash flow, we see that the company achieved positive operating cash flow in 2021, which has declined since. CapEx has worsened at a 18% CAGR. As a result, free cash flow has also declined since 2021. Falling operating cash flow coupled with growing CapEx is a recipe for free cash flow disaster. This chart is very worrisome to me. Weighted average shares outstanding have fallen over the last 5 years, going from 565 million shares in 2019 to 548 million shares most recently. Archer Daniels Midland has been buying back shares. Most of the share buybacks occurred in 2022 and 2023, indicated that there is not a strong history of commitment from management to continue share buybacks. Additionally, given the rapidly shrinking free cash flow, I am unsure if share buybacks can continue. Now let's view return on invested capital. Return on invested capital has risen from 3.9% in 2019 to 7.2% in 2023. This is good. It is apparent that some efficiencies have been found in the business. However, given all of the other data, I am skeptical that return on invested capital growth will continue. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 52 days in 2019 to 47 days most recently, Archer Daniels Midland has certainly gotten more efficient over time. Despite all of the company's other problems, they seem to be managing inventory much better. Now, let's look at Archer Daniels Midland's debt. The net debt to EBITDA has fallen a lot over the past 5 years, going from 3.5 in 2019 to 1.6 most recently. While no debt is better than some debt, this is a very manageable debt level. The company is getting some things right. Last, let's explore dividends. Current dividend yield is 3.5% with a dividend payout percentage of 24%. Archer Daniels Midland is paying out dividends that its earnings can support. This indicates that the company's dividend practice should be sustainable. Dividends per share for this company have grown at an 5.7% dividend per share CAGR over the past 5 years and a 8.9% dividend per share CAGR over the past 10 years. Archer Daniels Midland has a long history of dividend increases, though the rate of growth has slowed in the most recent few years. The fundamentals of Archer Daniels Midland are subpar overall, but there are a few positive findings. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Archer Daniels Midland. Given the concern of the SEC for fraud, let's discount the financial metrics by 10% across the board. It is a food company with a gross margin of 7%. The 5-year revenue per share CAGR is 11%. Since free cash flow went from positive to negative, the 5-year free cash flow per share CAGR is unable to be calculated. A return on invested capital of 7% is low. Next, the cash conversion cycle of 52 days is somewhat high. Concerning debt, a net debt to EBITDA of 1.7 means that it would take Archer Daniels Midland a little over 1.5 years of earnings to pay back their debt. So from a fundamental standpoint, Archer Daniels Midland is pretty sketchy AF. Now let's switch our attention over to valuation. Archer Daniels Midland is undervalued relative to the S&P 500 with a ratio of 0.3 using the possible fraud adjusted earnings value. The price to earnings growth, or PEG ratio, was unable to be calculated for this company. So, Archer Daniels Midland is tremendously undervalued compared to the S&P 500. While the sell-off is probably overdone, there is no way to know without corrected financial data. Even using the possibly over-optimistic data, Archer Daniels Midland is still starting to lose market share and has massive free cash flow decline. The good news is that the company has manageable debt and should not be at risk of running out of business. I think some investors with higher risk profiles than me will consider entering a position as a value trade on the recent pullback. I would like to first see the correct financial data before making a move, and for me the opportunity cost is high given the company's risk. For now, Archer Daniels Midland is coming off the watch list but could return once the regulatory mess is cleaned up. Many thanks for watching. What do you think about Archer Daniels Midland and the SEC investigation? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.